I'm John Hanna for CDTV.net, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good morning, sir.
Good morning, John.
Sir, we were talking about this one last week that you went into an investment conference out in California, right?
Yes, sir. It was out in Carlsbad. It was the 9th Annual Strategic Investment Conference hosted by John Sunt with Altegris and John Malden, who's president of Millennium Wave Advisors. And like I said, this was their 9th annual event, and really it was just a leading economic and alternative investment managers, some of the best in the business, got together in a great lineup of speakers and time of networking and panels of these not only alternative investment managers but also economists. It was very fun. There's probably over 400 attendees. I want to say probably maybe a third of those were in the investment business, and then the others were just high net worth investors from all over the country and some even the world attending. Great lineup of speakers. I mean, I can rattle off some of the names that were at the event. I mean, you've got Dr. H. Woody Brock, President, Strategic Economic Advisors in Arizona. Dr. Mohammed El-Iran of CEO of PIMCO, and Paul McCauley, who's a former senior partner at PIMCO. Dr. Lacey Hunt, who's the chief economist and the executive vice president of Hoisington Investment Management, and David Rosenberg, who's chief economist at Gluskin Sheff and Associates in Toronto, also former chief economic advisor and for Bank of America Merrill Lynch. So, and then Mark Faber is another one at Mark Faber Limited, Hong Kong, China. So, like I said, that was just a handful of people, a lot of good investment managers there.
Wow, that's a pretty good lineup. Now, see, here's the thing. Whenever you go to those conferences, what is the sentiment there? Are people kind of worried about the economy, where the economy is headed, or are people kind of getting back to that group of confidence levels is returning?
Well, I think, John, it's, there's a lot of concern in all areas of investors or advisors and managers. Concern meaning, we've got a lot going on in the world right now, and the world is going through a major debt crisis. What we're seeing in Europe and in the U.S. And so the developing world. The developed world, the more established world, like the Western world, is changing, and the game is changing a lot. And so investors are really looking to alternative strategies, whether it be managed futures, whether it be long-short strategies, and global macro strategies. And so, these great lineup. I think investors, it was amazing because, even the economists, they didn't just speak and leave. There's over 12 to 15 speakers, but they would hang out in the audience and listen to each of their counterparts or their people who were involved in other areas of the economy as far as economists and investment managers. So they were actually participants. So they would speak and hang out in the audience and listen. They would also listen before they would come up. I mean, it's just a great lineup, but also the people who attended were hungry for information as investors, but also there are many people who wrote newsletters. The economists from even some of the mining companies were there just to listen. We're not even speakers. And so, I met quite a few people in that arena.
Okay.
But really, I guess the takeaway that I received, I'm fairly a contrarian investor, but also feel like we have hyperinflation that will eventually come because of all the fiat currency that has been created over the last several years, not only in the U.S. but also being created in Europe. And so that devalues hard assets, and so I'm very hyperinflationary eventually coming, my approach. But what I picked up from this conference is most of these guys were too. From Rosenberg to Lacey Hunt to Woody Brock and others, and Mark Faber. Of course, he's a very bullish on metals and commodities longer term. But what I picked up from these guys, John, was, that's probably going to happen longer term because we cannot sustain these debt levels in the Western world that's being created, mainly in the U.S. It's just unsustainable. I mean, the interest service on those debt over the next 20 years, it's going to just, even conservative estimates, take up potentially up to 100% of revenues. So it's unsustainable. And at some point, most of the economists feel that at some point they're just going to inflate their way out of this. And so to create more money, to make the debt look smaller. And in doing so, that's going to create an inflationary event at some point. However, to my surprise to somewhat, is that in the near term, we could see more deflationary. We could see the economy even continue to slow, the Fed continue to try to stimulate. And David Rosenberg, who is the chief economist at Gluskin Sheff and Associates, formerly of Bank of America, Merrill Lynch, last year he called for the 10-year note, 10-year to be at 2% when it was trading at 3.5%. And everybody laughed at him. And what has happened since then, it's gone to 2%. It's gone below 2%. As I mentioned in my earlier reports, that the 10 years about 1.84%. He thinks that the long-term bond will hit 2%, and it's currently trading 3%. So what that tells us is that this is the case, and most of the economists felt that the economy probably will continue to sluggish along because of the European concerns and China slowing down, that in the near term we could see lower interest rates, even though they're historical lows on the long term now. We could see even lower rates, meaning that the economy is probably still going to become weaker or not as strong, and see a bigger turnaround at this point, because we have a lot of these governments and personal in personal debt is high, and so there'll be a lot more delevering to continue. But at some point, whether it's a year out or whenever, they anticipate that interest rates will start to rise. Of course, there could be some event that causes interest rates to have to be raised before that, but long term, interest rates will have to rise, and we will have that inflationary environment at some point. And but my takeaway from that is you probably want to add some high corporate high grade bonds into your portfolio. The treasury market has been very high, and they say that's the next biggest bubble, but it probably won't burst for for the near intermediate future, in the next year or so. And of course, nobody has an exact time frame. So that's kind of my takeaway is that we're probably going to see the economy continue to be sluggish, if not go into another recession next year, potentially. And of course, a lot of the focus was too questions about the elections and the budget deficits that are coming up looming, the tax changes after the first year if nothing's decided on that. So a lot of issues. And but the general theme is that U.S. debt interest service is unsustainable. We're moving to a post-Western world because most of the growth and business environment are more favorable in Asia and other developing countries compared to the U.S. and Europe and Japan. And so there's going to be a tax-mageddon. It's coming. I mean, you're going to see, if governments don't cut back, then they have to get revenue somewhere, and to increase revenue. So taxes eventually go up. There's being pressure from the mass populace to tax, and so you're seeing that in Europe right now. Nobody wants to cut benefits, and so they're going to promises to tax the rich. So it's going to affect everybody in that regard. But so that's kind of what I took from that. Most of them are very bullish on gold long term as a favorite currency. Because as long as interest rates are at zero and world banks in Asia and continue to purchase record amounts of gold, that we'll see gold continue to do well, even though it has been sagging lately. They view this as a buying opportunity.
Alrighty. Full disclosure, you have a gold fund, right?
Yes, sir.
Okay.
We have a gold fund we manage. We also manage other types of strategies as well.
Okay, great. That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net.